Okay, so the first way that you can instantly increase your tax refund and pay less taxes last year is to contribute to a traditional IRA if you haven't already. So for the 2019 tax year, you can contribute up to $6,000 per person to an IRA. And it's an extra $1,000 if you're over the age of 50. And if you are married, then that is $12,000, $6,000 per person. So potentially, if you contribute to a traditional IRA, you can still do it up until the tax filing deadline, which is April 15th, 2020. So you can contribute to 2019's IRA limits, even though it's already 2020. If you're in the 22% tax bracket and you contribute $6,000, like you haven't contributed any last year, but you contribute $6,000 for last tax year, you could potentially save $1,320 on your taxes or get $1,320 back during your tax refund. That is 22% of $6,000, because if you contribute that $6,000, then that reduces your taxable income by $6,000. Granted, you're not subject to phase outs where your income is that high. And then if you're married and you're in the 22% tax bracket and you do double that, it's $12,000, then that's a potential $2,640. So double the $6,000 for a single person. So if you have that extra money lying around and you want to put it to good use, put it into a traditional IRA so you can save for your retirement, you can grow your net worth, and you can potentially get a lot of money back on your 2019 taxes. All right, the second thing that I have for you is to contribute to a HSA, which is a health savings account. So kind of similar to contributing to the traditional IRA, you can contribute to your HSA. And you can contribute up to $3,500 to an HSA if you're single, or up to $7,000 if the HSA covers a family. Now, of course, you're going to have to already qualify for an HSA. And to do that, you're going to have a high deductible health insurance plan. For the 2019 tax year, your deductible had to have been at least $1,350 for a single person, or $2,700 if the HSA covers a family. So if you had a high deductible health insurance plan and you then qualified for an HSA and you have an HSA, then you can contribute up to those maximums that I mentioned earlier. And by doing so, you would reduce your taxable income by the amount that you contributed. So potentially $3,500 if you're single and $7,000 for a family. And again, if you are contributing on behalf of an entire family and you are in the 22% tax bracket, then that is a potential $1,540. So it's going to obviously depend on your tax bracket and how much you can contribute if you haven't contributed any at all. But it's a very good potential way to save from last year. And like I said, you have until the April 15th filing deadline to contribute for a previous year's HSA as well. All right, method number 3 to instantly increase your tax refund for 2019's taxes is to seek more business deductions. So if you're self-employed or even if you just have a business on the side, there are many business tax deductions that you can take that you probably don't even know about. So I would seek the help of a tax professional, especially like a small business tax professional, to get help with this, because they might be able to help you find deductions for your business that you had last year that you might not even realize. Pretty much anything that goes towards running your business is going to be tax deductible. So if you claim more tax deductions because of your business, then every deduction that you claim, dollar per dollar, that is a reduction in the amount of your income that is subject to income taxes. And even if your business didn't make a profit, if you had business losses, say from startup expenses, or anything like that, you can deduct that from your paycheck if you also work a regular W-2 job. So seek the help of a professional if you run your own business, so you can take as many tax deductions that you legally are able to, and that could help save you potentially thousands of dollars on your taxes for 2019, even though you are filing in 2020. Last but certainly not least, number 4 that I want to talk about is you need to make sure that you are taking the right filing status in 2020 when you're filing for 2019. And what I mean by that is if you're single, it doesn't necessarily mean all people who are single should file single. A lot of people could be filing head of household and they don't even know it. If you have a child, like you're a single parent, or you even have a dependent, say a grandparent or a parent that relies on you for more than 50% of their support, then you technically should be able to file head of household. Always double check to make sure that you are eligible to file head of household instead of single, seek the help of a professional or research and educate yourself to make sure that you are filing correctly. Because filing head of household over filing single comes with a lot of different tax benefits. The tax brackets are higher, so it could save you a lot of money on your taxes if you are able to file head of household instead of single. In addition to that, if you are married, but say you are separated, but you are still actually married, it might be beneficial for both of you to file jointly, even if you don't want to file jointly. Most circumstances, people who are married are going to receive more favorable tax outcomes if they file married filing jointly rather than file married filing separately. Of course, you should always seek the advice of a tax professional, but I believe in most circumstances, filing jointly will save both of you guys on taxes. So try to make up when tax season comes around and it's time to file, because both of you guys could save thousands of dollars. Try to compare how much tax refund you would get filing separately versus jointly, because most likely the jointly is going to be a lot more. Just because also, if you do file separately, married separately, there are a lot of actual tax consequences that come along with that I won't really necessarily get into. Two off the top of my head is that you are ineligible to take student loan interest deduction, and your traditional IRA deduction gets phased out above just $10,000 if you file married filing separately. So try to make up for the tax year and file married filing jointly, because that could save you guys both a bunch of money. I hope that these 4 quick tips help save you thousands of dollars on your taxes when you go to file this year. If you have any more tax tips for me or for anybody else that might be helpful for them to reduce last year's taxes, even though it's already 2020, please leave that in the comments below. And if you have any other questions, you can leave those in the comments below. I will try to answer them the best that I can. I am not a tax professional. I'm not licensed to do taxes or anything like that, but I will do my best. I will do my research and I will try to help you as much as I can, because I really enjoy doing it and I enjoy helping you. And if you want to help me, I would really appreciate it if you just like the video and subscribe to the channel, because I love putting out more information on personal finance and I want to help as many people as possible. Thank you so much for watching. I'm Zach from OnCashflow.com and I hope to see you next time.